Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
We're going to have you save every dollar you make and leave nothing left to live. Just like we'll have you work till you're 80, you die at 81, the plan's going to work great. Terrible jokes. But the point is the more you save, the more you're going to have. The longer you work, the more you're going to have. But that's not living. That's not life. That's not someone's long-term financial plan. Well, candidly, it might be for some people, but that's not very typical for what we see. And so, it's the optimization that comes from that and making sure we're interfacing it with a financial plan. When I think about the stewardship of wealth. And we talk about, like, as we're working, as we're accumulating, one of the things I wanted to talk about was these accounts, when someone passes away, they go to a spouse, and spouses, for all intents and purposes, get the same rule as the participant. So let's just assume it's the same. But for anybody else, there's now a new set of inherited rules that comes with it. And candidly, IRA and Roth are essentially the same. But Mike, why don't you talk a little bit about what are the rules for an inherited IRA as well as an inherited Roth IRA?
Yeah, so essentially with the passage of Secure Act 2.0, they've eliminated what's called the IRA stretch provision. What that basically means now that if an IRA is inherited by a non-spousal beneficiary, which that covers a lot of people, but basically the IRA needs to be drawn down within 10 years.
Yeah.
If the decedent, the person who had passed away, was already taking required distributions, over those 10 years, you got to continue to take a little bit of a required distribution as well. But the bottom line is the whole account needs to be emptied out within those 10 years.
Yeah. The one thing I was going to point out is this rule went into effect in 2020. So if someone passed away prior to 2020, they still get what Mike mentioned was that stretch, which means that they can take out the account over the beneficiary's lifetime. But that's now gone. So anybody who dies, who has passed away or dies in the future.
The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.